Hello guys, glad to have you on board again today. We're going to start another week, so what we're just going to do as usual, but first there's just a couple things I would like to cover up. First I'm going to give you the planning for the week to come. Right on Wednesday, what we're going to do is that we're going to take care of the correction for the second part of the MCQ test because it's something I barely forgot. So we're going to do this before I do actually forget about this. Regarding the fact that we're already the 20th of May, I hardly think I'll be able to handle the MCQ test for May. But the thing is that I'm probably going to work on building the June's one. But starting in June, I'm going to start doing this MCQ test at the beginning of the month. So kind of trying to publish this on the first week of the month and trying to keep that pace as we go on for the next month. So it's just we're going to skip May just to do early June kind of stuff instead. We're also going to take care about the scalping coaching I wanted to put in place and put in motion if we do have a very low volatile summer and stuff like that. So everything that's been promised will be on schedule. It's just that there is a lots of things to take care of in between. I need to do those daily shows and stuff like that. So it is just a big program that we're going to follow in the next following month. So don't be overexcited. I know some of you guys are really expecting a lot of those scalping shows that we'll make. So please calm down, cool down. This is not a game changer. Just a few of you among you will be compatible with scalping. Even though this will probably be interesting for everyone, it's going to be actually usable by just a few of you guys. All right? So please don't get overexcited. I know you are, but teasing you wasn't the goal in here, and I try to be straightforward with you since the beginning. All right, most of you guys are just fooling yourself, thinking that this is the absolute solution to your problems because you're lacking of patience and stuff like that. And once again, every fucking one is lacking patience because being patient is not a human quality. Just a few persons have it, and most of us just suffer from it. But the thing is that everyone is, and I was back then as well. I just learned how to manage patience, even though I'm probably the least patient person among everyone in trading community. So I learned it the hard way, and it took me years to get through this. But still, scalping wasn't the answer, all right? Just working around your own impatience is what you need to do, all right? And only time can process this, hard work, but thinking that, no, you're never going to make it, so you rather like to go scalping because it's going to be the easier solution. Every easy solution in trading is just a bad solution, all right? So see it that way, and you'll see this way more clearly. Anyway, there's something else I wanted to talk about before we actually get to some charts and some scenarios. It's talking about Discord. Yeah, so some of you guys may have figured out and seen that we've been breathing life back into Discord. That was planned as well. So things are actually moving right now. I'm back in Discord, and I'm doing anything I can to just publish a lot of analysis, real-time alerts and stuff like that to tell you, like, for example, we've got a nice BTC signal, stuff like that. BNB could be interesting for some sellings and stuff like that. So I'm sharing you educational content in advance. All right, I'm not telling you I'm selling this just right now with a taking profit in here, stop loss in there, because I don't really think this is where the actual reliable coaching information comes out of, but more likely telling you, all right, I see this kind of context, and this is the area in which speculative prices might be interesting to look out for a signal, because that's what the actual fucking job is about, not trading. Trading is just the finality, but the finality is the goal, is the target to reach out to get to the trade. But what's really important is how you fucking get there. It's what makes the difference between the noob and the trader. The trader knows and clearly knows how to get to a trade with low risk opportunities. As the beginners, we'll see opportunities every fucking where. So I'm trying to teach you how to process information. And this is throughout Discord that we're going to do this, and we're going to do more and more of those stuff. Even though I don't want to spam you 10 times a day, I'll try to send you like a couple notifications a day at best. So some people have been having some troubles with this not being able to turn on notifications and stuff like that. So I tried to dig a little deeper into this, figure out where the problem was, and this is exactly how you need to process this. So first, you need to be in there. Remember that when you're joining us on Discord, you easily find the link. I think it's also shared in the description of that video if you want to join us. It's free, absolutely free. You don't need to use the indicators. All right. Once again, I'm mostly sharing my strategy and the way I do trade the market, purely speculative and stuff like that. We are also obviously showing indicator support in this Discord, but still, I mean, if you would just want to talk with other people and share some scenarios, I'm fine with that. As long as you do trade something that gets close to my strategy, which once again doesn't necessarily require the indicator. The indicator is just a tool that will help you using the strategy more efficiently, but still, if you can't afford that or just don't want to be using someone else's indicator, I can totally understand that. Just come here, pick my strategy, just make it personal and take whatever you want in there. That's all basically what I care about when I share my job, moreover than just trying to sell you goddamn indicators. All right, there are no magic tools. I've been clear with that. This is not the indicator who's going to make you a better trader. It's just going to help you learning a little bit faster. It's just a convenient tool, no more than that. So anyway, what I've done in here, just as a reminder, is I've been putting little icons into the channels throughout the Discord in which I would like you guys to turn on notifications. For a simple reason, simply because those channels are channels only me can post. All right, you guys cannot post any fucking thing in here. It's just me or the bots that will push you the actual stuff. All right, so educative content is all the videos we made for specific contents. All right, so facing this is exactly how you're going to do this. All right, I mean, what the fuck? This isn't supposed to be there. I'm going to have to work this out. So anyway, it's just anytime something is going to be posted in there, you're going to receive a notification. Right? So what we're going to do is I'm going to explain how you can get notification from some certain channels and not from others. Because obviously, when you get to channels like Analysis Crypto, you're going to have a shit ton of people just posting in there. Oh, by the way, exit left. I'm going to give you a role. All right, you're not going to be a sergeant. I'm in a colonel. Because I know you've been posting a lot recently. Jansen as well. You're going to be a general. All right. You should be first class as well. I don't know what the fuck is in that. All right. So these roles are no big deal. And Dimitri, what the hell? Why aren't you a colonel as well? And just these are the guys I'm used to see posting. So the more you post, the more you participate, the more I rank you. And the rank is no more than just a color for your name. So it's no big deal. It's just like a confidence or a trustworthy kind of code. The guys who have a collar, you know they're there for a long time, so they're experienced with the strategy. You can ask them questions and stuff like that. It's just more about that. Anyway, back to the topic. So the way you want to do, as you say, in here, everyone can post. So if you get notification every fucking time a new message is posted on those channels, then you're going to get pinged and get notifications every fucking 10 seconds, and it's going to drive you crazy. So this is how you do. You right-click on the channel in here. You make sure you haven't been checking muted server, all right? Because if you do this, then you're going to get no notifications at all. What you do is that you right-click and get a notification in here, first making sure you don't have muted the server first, all right? And this is how it goes. So you unmute, if you did, you make sure you're going to have notifications for every message, all right? Every message is important. You can deactivate at everyone and at here to avoid being pushed by someone else. And you need to make sure notifications push on mobile. And you need to have installed the application on the mobile as well, obviously. The thing is that where it gets interesting is in here. You're going to just unwind this list or put down this list. And this is where you're going to get every channel throughout the Discord. All right. So what you're going to do is that you're going to get, for example, educational content. All right, and you're going to turn out every message in here, which means you can mute the servers you don't want to be alerted from. Okay, you can mute them. Personally, like Analysis Crypto, you don't want to receive every fucking message, or you just want to be mentioned. When you're mentioned in this channel, you just want to receive a notification. All right, muted just says one thing. Well, the difference, as you can see, this thing in here is checked, which means I'm going to have a notification bubble, but not a notification on the phone. all right, as this has been muted. What's the difference between this? Okay, this means anytime something is posted, I'm going to get a ping message in my phone instantly, all right? But when I have this, mentions, and this muted stuff checked, what it does is basically I'm going to get a bubble. Like, I don't have any in here, but when somebody is mentioning me in a channel, I get a little one, like this little one, put it in here. So I know somebody has been talking to me in this channel, but still, I'm not going to get this notification on my phone. Otherwise, I would have these messages all day long, all right? So that's how you do stuff. If you don't want the notification on the mobile, then you just mute the notification, but still you can receive it. You're just going to have a little notification bubble as you've been checking being mentioned. All right? And then obviously you need to turn all notifications for all the channels that have the little icons. All right? Obviously you're free to select not the swings or not the intraday. If you're just a swing trader, you don't give a shit about intraday alerts, so you just turn them down. But if you want to make sure you get those on your phone, you just need to make sure you haven't been checking the muted thing and that you want to be alerted in every type of message input. All right? And just make sure those stuff, it's only me who's going to be able to post in them. So no one will ping you, no one will message you but me from those channels. And I'll try not to ping you 10 times a day because I know how boring this can go if your phone rings 10 times a day because someone just wants to talk to you. All right? So I'm sticking to the essential in there to avoid multiple notifications. Now, that being said, that's all I wanted to do. So let's move on to the actual content. So already 10 minutes in. Like we said, all right, the purpose of this Discord is mostly educational content. I'm not here to sell you some goddamn shit. I'm just here to tell you what I do, all right? So like, for example, this is what the kind of stuff you would receive. BTCUSD, H1, interesting context for potential bearish range selling entry, only for those who think the run is over. That we may consolidate, retrace for a bit. Remember that this is that this remains pretty risky, so please stick to speculative leverage and avoid brokers that have bad habit of stop hunting, like Kraken, etc. At the moment, there is still no signal to trigger the trade, but I'll probably take the trade if something shows up. All right, I gave you the chart that goes along. No, there was no chart in here, but I always give you the topic, the asset and the time frame. So what you do is, for example, you go BTC fucking USD and you go 1 hour chart time frame, and you'll see what I was meaning. All right, this message has been posted at 11 a.m. on my local time scale on the 19th of May. So this was exactly 19th of May at 11. It was posted in here. All right, that's when we were there. This is where I sent you this notification. I told you, watch out for BTC USD. We're entering the bearish context in a possible bearish range structure. Wait for a goddamn signal. We had the red triangle. So what I told you is that you're just going to put and set an alert, create an alert on BTC USD. This is how you do. You select framework, trading range alert, and a trending range alert, and ons per bro close. This triggered right on this close in here, all right, as we had a little triangle. And just to set things straight, we're going to make a dedicated video about those new alert systems. I know some of you guys have been asking me about it. It's pretty simple, really actually simple, but I'm going to make a dedicated show in which I'll explain line by line, condition by condition, what will actually trigger those alerts, so you'll fully be aware of what goes on. But to be honest, the process is simple. If you figure this out to be a range, all right, well, the way you do, if you just want to be alerted when something reliable shows up, you just do this. You go there, you select framework, and you select the range alert, all right? So you figure out you are in a range context, god damn it, put the fucking range alert and move on to something else instead of waiting for and watching for candles. That doesn't matter. You put the alert and move on to something else. You say, all right, BTC USD, H1, range alert. All right, just to say to explain, for example, the range alert is just going to wait for at least crossing the Fibonacci retracement. All right, so 76% Fib retracement. So it will at least need the 76. It will require the price to have crossed on top or below of the context channel. So these are the conditions that I require on the PDF manual. All right, remember the PDF manual. I'm just going to pull it up. Oh, and by the way, I'll also tell you about that. We now got the Russian and German versions of the PDF manual being available, thanks to some users who've been translating them. So there might be a Chinese version as well. I remember someone has been telling me it would eventually do this as well. So maybe some other versions and translation coming along in the future. As for now, this is the English natural version, and you got Russian and German additionally one. So as for example, if you get to this one, all right, you scroll it down, all right, to this part. All right. Remember what are the conditions for a neutral range? Minimum 76% retracement. You need to be beyond the context. You need to have a signal plus a triangle. All right. So if you just put it, translate that into code. All right. What actually is going to be triggering any alert in there? So you need 76% Fibonacci. You need to cross over or below the context channel, and you need to have a triangle. This is the trading range, the range alert. All right. In here, like I said in the message in Discord, I've been putting trending range alerts, all right? Look at what the trending range alert, 61% inside the context or beyond, but at least inside, signal plus triangle. Back to the goddamn chart. Where do you think this alert has been triggering? It has been triggering on that triangle because we were above 61% retracement, we were inside the bearish context, and we did have a triangle. The only thing this indicator cannot figure out is whether or not there is a signal. So there is still something you need to do on your own first. You need to be alerted with this, and you just need to go back to your fucking chart and make sure there was a signal before the triangle. How complicated is that? I mean, simply, it's really, really freaking simple. You put the alert and you just go back checking if there was a signal or not. In that specific case, no fucking signal. So what happens next? You wait for the next time this alert triggers. It's been triggering another time in here at this triangle, and this time we had an exit signal. So how do you apply the goddamn strategy? You've been applying context identification, price filtering, next step is a signal, and risk management. So this is an exit signal, which is a pretty good one, plus you can clearly see that there is a visible divergence out of prices, all right? Prices made high, not the momentum, so it's an exit and a divergence. The cycle is pretty much at the top in here, so we're good. This selling signal, you can definitely take it. This is the kind of signals you can trade. It isn't that complicated. You know what you're trading. You're not trading a stupid bearish reversal who's going to crash down Bitcoin and stuff like that. You're trading a goddamn range. So you know where your targets are. You're profit taking at 61% or 76% fib. That's it. That's exactly it. So this is your first taking profit. This is your second profit taking. And you don't give a shit about any fucking thing else. Your stop loss is reliably posted in here, so you gotta have a stop loss. You can, if you're aggressive, you can put it at the market top. If you want to have a little bit more, then you probably would have entered in here. All right, let's say this price. Right, you put a 1-to-1 risk-reward ratio. That's how simple this is. You say short entry at this price. All right, your first target is in here, so the average target is in between those two, and you put a 1-to-1 risk-reward ratio. All right, so you can put a stop loss up to $8,650. And just this is a range trade. It isn't that complicated. The price will either go there or there. You don't give a shit. All you know is that you're risking a 1-to-1 and you have far better odds to go there. All right, it's a 50-50 game. You never know what the hell is going to happen. All you know is that you've been managing the risks. How did you do this? You just apply a goddamn strategy. It's not that simple. You limited the risk for you to be wrong. That doesn't mean you'll necessarily be right. All it says is that you've done anything you could. Anyway. All right, so that's for BTC. That also explains what the hell I'm figuring out for the week to come. Because if you have a look at the weekly candle close, then this definitely isn't the kind of candle you want to sell. All right, it's closing at the high, stuff like that. But still, if you zoom in throughout the week, this is what's been happening. We open the week in here, we go straight up, we retrace entirely, almost entirely, and then we go up again. So what we've done is pretty much some 4 swings on a single week, up, down, up. All right, which means, to me, next move is down, and if we hold the down, then we'll go higher. If we don't, then we'll have to consolidate longer, probably building a triangle or a flat structure, and if we cannot hold in here and if we break down, then we're just going to have a bearish trade, and we'll go from bullish trend to bearish trend with a double top reversal structure. Very less likely going to happen. Reason why, I still think this is just a range opportunity. So some people are telling me, Phil is stupid, the market is going up and now it's selling. No, I'm not selling, I'm range trading. That's definitely different. I'm just profiting from hesitation. If you cannot understand that, then you don't really understand what trading is about. It's about context. If you see things as black or white, buying or selling, then you're really not getting it. The market is shaded fucking grays. You're not buying and selling with the same amount every time. You're not putting your stop loss at the defined number of pips every fucking time. Every trade is different because every trade has a different context. Every trade has a different risk management because of different signals, because of different prices and stuff like that. It's just about it. I know how complicated this is. It takes a freaking long time to figure this out, but still, you need to start at some point. And the easiest way for you to get through this is to learn how professional works. I'm not making things easy for you. I know that. Because it's not easy. As simple as that. But you have to start somewhere. So I'd rather like to put you into natural trading condition, real conditions, and this is how you'll see how it works. But through time, you'll process those information. It may sound like an enormous amount of information to process, and clearly it is. But still, you'll get through this. It's just, it requires some time, some patience, to have a mindset, to have a vision, to be patient. And if you do have that you figured out that probably 6 months or a year from now, you'll have processed, not entirely, but you'll have processed most of those informations. And you'll be clearly way better than you were 6 months before. All right, enough bullshit, back to trading. So that's it for cryptos. I think there's no more to expect coming out of Bitcoin, more likely some hesitation and rotations inside the crypto sector. So what I'm trading is crypto versus fiats. All right, so when I do this, I think crypto versus fiat is not going to increase in value, mostly because the money is already in. Now what's going to happen is the rotation, meaning people will get out of just Bitcoin and just spread the risk throughout other crypto assets like altcoins and stuff like that. The risky part of the trade has been profit taken for most of them. What I think is that now most of them are going to reinvest this risk into some side assets. Typically some fiats. It's definitely the alt season over again, meaning that some people would just trade spread charts versus BTC. Like for example, instead of buying ETHUSD, what they'll do is buying ETHBTC. So they'll sell Bitcoins to buy Ethereums. They'll buy Ethereum with Bitcoins, if you get it this way, all right? It works like that. It works for any other charts. Like really, to me at the moment, these are the things you should do. Not looking at vicious USD, but looking at BTC. All right, looking at spread charts. That's the thing I don't do. I don't trade those stuff. But this is where you want to make your future trades if you're a crypto-only trader. All right, you look at those spread charts and you try to profit from them. As you can see, Ethereum has been freakingly profiting already. We're back into selling context in here, so it's not about time to search for trades in there. It's not time. But there are some other crypto assets like, as for example, you can take this one. I think it's viable, Cardano. All right, look at that. You're looking at something to buy versus Bitcoin, and you can go ahead with that. I mean, that really fits the plan. Just to be fully honest in here, this is not my scenario. It's just someone else I saw and I trust who's been plating some trades on this. So I say, yeah, okay, I'm going to review this, and I totally agree with that guy. So no problem with that. For example, if you want to trade ADA, so Cardano versus Bitcoins, I definitely think it's worth the shot. This kind of chart is pretty much going to provide some gains. The thing is that it requires a goddamn strategy application, all right? So you need to figure out which time frame you want to put yourself at play, and to me, it is definitely 1 hour. That's going to be the actual time frame to trade. As you can see in here, we're still having some unfolding boxes on the support, so pretty fucking bearish recently, but still, the resistant boxes are folding, which means we're not out of control. It's not speculative trading in here. It is not speculative bubbles or stuff like that. It is rational trading. It's just aggressively bearish So it might be risky, but still, as you can see, we're folding boxes again. Look at that. The new box in here is folding to the previous one. So we're back in the goddamn range. We're ranging in a range. So that's perfect. Just zoom out and you'll have a clear sight of what the fuck's happening. All right, we might have consolidated freaking longer in here, but we have a goddamn higher low. So you want to buy this shit? I'm okay with that. I'm definitely. The thing is that you need to trade a context, so you probably 1 hour. This is where you're going to do. This is where you have the bullish context. This is where you want to trade this. I mean, if this is not something you can trade, then I don't know what you want to trade, because this is exactly the kind of stuff you want to trade. Let's put the strategy in play. Are these prices interesting? I give you just 10 seconds to figure out on your own. Ask yourself the question. You know the strategy, you know the rules. First of all, you hide the goddamn momentum. Remember, the momentum is a signal. It's step 3. You shouldn't focusing on the signals. I know most of you guys, first things first, you get in there and you're going to say, oh, we've got an exit signal, we got to buy. No way. First thing, context. Second thing, price filtering, and only then gets the signal. So, first, what the hell is this context? It's pretty fucking noisy. So, delete prices. And then you do the analysis. All right, we're going to do these same old gang. All right, you try figuring out relevant information in here, stuff that you can judge without problems. In here, bang, bang, 2 times the context being unfolding. So something has been happening in here. You can see the trend channel crossing as well. So price crossing both the context and the trend channel. Probably there was a breakout attempt in here. Probably, but still we had no cross. We should have a breakout in here. So probably just an acceleration, but a fake breakout. All right, in here multiple range signals, bullish range, polarize, bullish range again, right? So range with a bullish bias. So how do you goddamn trade this? I think the answer is this. All right, what we have in here is probably a bullish range. We probably build a major low out of this in which the market tried to go lower. So this is probably a final excess, breakout, pullback, final excess. So this was a bearish trend. We're probably ranging, first of all, but this is probably a goddamn bullish range. So you want to favor buying this range. You can still sell it, but you'll sell with lower leverage than you buy because odds are clearly to the upside. Now, what are the conditions to buy in a bullish range? First of all, you need to have at least 1 year of experience using the strategy. Otherwise, you wait for at least 76% fib and getting below context. So this is the area of interest for beginners. You're not going to take any trades prior to that because it's going to be too risky and you're going to have to manage risks that you're not really fully able to manage. All right? Those who have a little bit more experience, you can trade that range as a bullish range because you have some signals suggesting it might be the case. But what are the conditions? 60% Fibonacci retracement. All right? Can you validate this condition? Let's put the price back in the game. No, you can't. We're close to, but not yet at 61% retracement. So I know how stupid this may sound. If we were like there, I would say, okay, we're done with it. No, I don't think we are. We're close to, but still not enough. So do you take this signal? The answer is no. You wait for the price to test the fucking 61% retracement. All right? It's pure and simply this. So how do you do that? You have 2 options. Either you stick in front of your goddamn computer and you watch out for every fucking candle and lose your time and your energy, or you just place a goddamn alert. So you do framework, you want a range, trending range, right? You want to be alerted at the bar close, and you're just going to do this, ADA BTC. It's an H1 time frame on a trending range alert, all right? So the trending range alert is going to alert you whenever you got a triangle with a price close to or below 61% inside support or resistance context. It's also going to alert you anytime there is a breakout. All right. So anytime something goes unexpected with the cycles, you're going to have an alert. That doesn't mean you want to have to trade. It means that something is interesting in this range. That's all about it. All right. So as for example, if you set the alert in here, you would still haven't been triggered, but just once in here. You would have got an alert out of this thing because this is a reliable information. When you have this information, you know that this is probably close to 61% that this thing is going to reactivate. So are we close to a trade on ADA BTC? I think yes, but still not yet. It's pure and simple. And I don't know a goddamn shit about Cardano. All I can tell is that even if I don't know, I know where this thing is going to be interesting if some trade has to be placed with a low risk opportunity. That doesn't mean it will reverse. That doesn't mean it's going to provide shit tons of enormous billion gains. All it says is that this is where the low risk trade will be, if such thing is. And once again, it will require a goddamn signal. Which means if we go there, if we trigger a blue triangle fitting all the strategy's rules, if we don't have a goddamn signal, then there is no trade because there is not enough risk limitation. All right? Anyway, I've been way too long. We're half an hour, so I need to move on. All right, stop with cryptos. So like I said, you do trade altcoin versus Bitcoins if you want to trade cryptos only. Otherwise, selling Bitcoins and stuff like that, like BTCUSD selling entries, only range context. So don't be too aggressive. Don't think this thing is going to collapse, that you can target 5K or stuff like that. It's totally out of context. All you can do right now is targeting hesitation and pullbacks, like sideways action with tiny position sizing, just to like pick up some dust and crumbles down the floor. It's simple as that. All right. Now, aside from this, the big game, what to fucking do with the Fed ahead on Wednesday, because normally at the beginning of the week we have a look at the economic calendar, but in here I'm going to go straight to the essential. There's not a lot of interesting things going ahead for this week, but the Fed minutes and a lot of central bankers talking. So it's a central bank week to go straight to the point. The thing is that we have nothing to do with it because we cannot anticipate what's going to be said. You don't know how it's going to be interpreted by the market. So it's hard to say. It's going to be hesitation. It's going to be shaded areas. So we need to risk manage. So I think everything is surrounding the dollar this week. So this is the major topic, volatility and dollar. As you can see, volatility has been building a strong fucking support, going out of control, and then they're trying to put the control back in the game in here. But we can clearly see that we've set some bullish trends in the 1 hour chart time frame. This is just consolidation. And as you can see, the range in here is getting matured. I'm going to use this instead. I really like that. Right, so range has been mature. We already got 4 boundaries in this range, so it's late stage ranging. We can forecast some trends. The major trend remains bullish. We might be building a major higher low, which means if this thing were about to reactivate, ugly stuff down the corner because we're going to have higher lows, so we make higher highs as well, which means we may have volatility above 23.5, and that will be significantly bearish for the stock market. That doesn't mean we're going to crash. It just means we might have some risk plunging back in the market. So that's for VIX. All right, so VIX with bullish risks, but we do have an expiration during the week. It's going to start out of May 21st. So it's hard to say. We're probably going to try handling stuff to be closing volatility at a midst area at 14, 15, something like that. We're going to try closing in this area, and next contract's expiration is going to be significantly more interesting in terms of bullishness. So you can be damn sure I'm going to be buying this VIX once again. That doesn't mean it's going to work out. If we do have a pretty low volatile summer along the way, this is what's going to happen. They'll do any fucking thing to prevent volatility from going out of control, and we have a monthly expiration, pretty fucking uninteresting, probably retracing back to 13 or 12 or stuff like that. We're probably going to maintain a higher low, all right, but still we could have just a dying volatility out there, all right? So be aggressive. Don't be too aggressive if you want to buy the rollover on the VIX. Just watch out for signals. Apply the strategy. As you can see in here, we've got absolutely no signals of slowing down for this bearish pace. So you let it go, I think. All right, we'll have plenty of time to talk about VIX in the future. So there's no urgency to get into buying VIX on the new expiration. All right. Junk bonds. All right, as you can see, they've been retracing, but no more than that. The major stuff remains bullish in a swing perspective. We're closing on to the 4-hour context. We try to break out. So what is this? All right, is this a trend breakout or is this a range breakout? Just apply the goddamn strategy. When you've got those stuff, remember what this is. You need to have like what the strategy tells you to do when you get it across, all right? Just when a signal shows up, you need to know what it means or what to do with it, all right? When you've got those stuff, you're looking if there is a range, all right? Normally, these are range signals, all right? These are range polarized, and these are, we don't know. Either this is trend breakout, or this is going to be a range breakout. So let's take an example. Does it look like a range breakout? No, this was a trend breakout, this was a range breakout, this was a trend breakout, this was a range breakout. So those targets, they tell you that we're ranging. So in here, do you think this is a trend breakout? I don't merely think it is. What are the conditions for a goddamn trend? You need to have, sorry, I'm going to use this as well. You need to have lower highs. All right, or at least double tops. In here, we just got one top, one bottom. Do you really think this is a trend breakout? It could be, yes, but very less likely going to be one. Very few chances. So what are we going to do in here? Probably retrace, build a lower high, and maybe the next one is going to be a trend breakout. That's it, all right? Just apply the rules. Something is interesting with this, but that doesn't mean we can be bearish now, all right? So, as we said, VIX could remain subdued. Junk bonds, there is still a risk, but probably just not right now. All I will note is that we've made a lower momentum, so I would hardly suggest that what's coming next is exactly what I said. A retracement, building a lower high, and then the ugly things may show up afterwards. All right, so not a lot of bearish pressures coming from the junk bonds, not a lot of pressure coming out of the VIX. So, everything is about the goddamn dollar for the week to come. I sold the dollar last week because I had early signals and I wanted to trade ahead of the Fed. For what goddamn reason? Just once again, put the price out of the game. What the fuck is this? This is just a range. Now this is a very, very complex range. Let's figure out all the informations we have here, just processing them one by one. All right, first one. In here, first range breakout, then we've got bullish range bias, which means back then it was risky to trade bearish, but still, oh, now bearish ones. All right, so this is pretty fucking nasty range. We know about that. The dollar wasn't ready, it wasn't easy to trade recently, but now we do trade the last signal, which is a bearish range opportunity. All right, so we favor the selling entries in this range. Then range. How many ranging signal do we have? This, does that look like a trend breakout? Don't nearly think it is. We got lower lows, so this is probably just another range breakout. Just a trap. So, do I want to sell this target? Definitely fucking yes. All right? So, why have I been selling last week? Because we were trading at this target. I just got a little bit more aggressive taking the signal in the 1 hour chart context, and that's it. 1 hour, same targets. So yes, this area was definitely something. I don't know what the hell is going to be said by the Fed or the central bankers in the forthcoming days. All I can tell is that on a low risk perspective, that's all I could do. Taking the trade in advance, I'll manage my risk, hopefully before the Fed, and that's it. If it works out, I'm going to be safe when the minutes will show up, and then either I'll be right or wrong. I don't nearly give a shit if I'm secured. I will just be a gain or no loss, and I like that kind of trade. Or it will be just I won't be able to manage, and I'll partially profit take, reduce my leverage, and I'll play the news without knowing any fucking thing about what it's going to be and how the market will take it. I'll just do it low risk. That's all you need to figure out. I'm not a magician. I'm just a guy who managed the risks. And that's the only thing that makes a difference between some guy who will randomly buy, randomly sell, randomly gain, randomly lose, and get, if he's lucky, a little bit of money this month, and if he's not lucky, he's not going to make any shit money for the month to come. My goal in here is to make reliable, long-term, and consistent incomes out of trading into something that is, by fucking definition, unpredictable. So how do you do this? There's just one way. It's risk management. Either you learn that, and that's actually what the trading job is, or you just gamble. I'm fine with that. If you like gambling, then just do it. But don't call yourself a trader, because that's not what you are. All right? enough bullshit. I'm talking way too much today. I'm sorry about that. So everything about the dollar, just like I said, if you have a little bit of experience, you start anticipating stuff, or you do nothing. You just don't play the Fed. You just stay out of dollar, and you just focus on low risk areas, like trade something else. It's hard to say, but as for example, if you do want to trade something with low risk, but still with a bias with the dollar, I would say GBP USD is definitely something you can trade in the forthcoming weeks. So let's put this in motion. Once again, what the hell is this? What kind of context is that? It's pretty fucking noisy. As you can see, it's easy. Is that a range or a trend? You look at where the chart begins, what we are now. We're pretty much at the same price. So this is no trending. This can only be range, all right? Then range can be either bullish or bearish. The way you're going to answer this question is having a look at further information. So this is pretty fucking noisy. Delete the prices and then do your goddamn usual analysis. So this is how it goes. We'll scroll back in time. We probably made a major low in here, major high in here. So these are the major swings, okay? I'm just having a look at the broad picture, the context channel. It definitely fits the range, and as we can see, we're probably building another low in here, all right? We can zoom out a little bit more if necessary. All right, it looks pretty fucking complex in here, all right? So definitely, that's what we have. Man, I like this, dude. The fuck? All right, so we made boundaries. All right, this is how the context has been reversing. So yeah, this definitely fits the range, all right? Then we have a look at the trend channel, how it's been behaving. We can clearly see that this is how it's been playing, all right? First set of wave, second wave, all right? First set of waves, second set of wave, first, second. Oh man, doesn't that look like a range? Yes, it's perfectly fitting the range. Two sides up, two sides down, two sides up, two sides down, two up, two down, two down. We just don't know what the fuck to do with it. It just doesn't know where to go. So it's a range, so we apply the goddamn range strategy, at least on those time frames. I have a bigger picture scenario on GBP USD, which is bullish, which means I'm favoring a little bit more bullishness on these scenarios, but still, on 4-hour context, there's nothing to do with it. It's just neutral, but we've done the two sets of waves to the downside, so we look for a fucking reversal. So, what the hell is this? What do you think that is? This breakout signal, what the hell do you think this is? Is this the kind of thing that suggests a bearish trend is along the way? Or is this something suggesting we're probably going to have to buy this area close to this Fibonacci retracement? That's simple, right? Well, like I said, I'm not inventing any fucking thing. Those crosses, you have them. Those signals, you have them. The rules to apply the strategy, you have them as well. I know there is a lot to process, but that's not infinite. There is a limit of things you need to learn, and when you learn, you're just going to have to process them, use them day after day, and you'll see that this will become like an automatism. It will be easy. It doesn't take more than a few seconds to me to process those informations. Anyway, so back in the price, we're here, we're closing up on the Fibonacci retracement. We're reading out the short-term informations, all right? Now, what do we have? We've got a bullish trending signal. These are blue signals. This is the kind of stuff you see in a bullish trending market. Does that look like a fucking bullish trend? No, it isn't. So, do you buy that kind of signal? Absolutely not. That doesn't fit what we're looking for. We're looking at end of bearish movement kind of stuff, more likely taking profits, those stuff, oversold. These are the kind of signals I'm looking forward for, not bullish signals. So this is not something I'm taking. Moreover, there is no blue triangle. So there is no price okay. All right, so in terms of signals, all that's suggesting here is that we're probably going to go a little bit lower and then build the dip. Probably we're going to buy closer to this area. Oh, sorry. All right, and this is the area in which the cluster will build itself. So what's going to happen? We're probably going to retrace a bit, create a divergence, and buy. So you know where to buy. It's probably going to be at the on Thursday. No, it's Wednesday. We're going to have Mark Carney is going to be talking. We're going to have stats from GBP. We're going to have the Fed. So definitely Wednesday is going to be the swing trade for GBP USD. All right, that's all it says. It's not really complicated. I think there is a trade to do, low risk trade with GBP USD, ahead of Wednesday or on Wednesday close to this area to buy the dip. You buy the dip, you put a large stop loss, and you wait for the trade to validate. The trade will be taken in there, probably stop loss in there, validation will be there when we'll cross the trend channel. All right, this is where you rise the stop loss out of the dip, and you expect the price to rise from ashes. And if it does, then it's gonna go 2 sets of fucking waves. All right, simple as that. So we're probably not gonna get there straight line. We do it 2 ways. All right, first wave consolidation, second wave, and in there we'll be in the resistant daily context, and we'll have to trade daily, which means either we're gonna have an accumulation and a bullish breakout, which I think is probably what's gonna come over, but still, in terms of timing, this won't happen until late stage summer. So figure this out. These are multi-layered time frames. You trade on some specific time frames. You do have bigger pictures context and stuff like that. This is the vision I have for the daily chart, but in a 4-hour context, this is still a range that we'll have to trade at the moment, pure and simply. What else? I think we're done. That's pretty much it. Regarding SPX, yeah, we're going to still do SPX. Have a quick review of this. So like I said, it's hard to figure out in there. Hard to say what the hell we're going to have. This is the broad picture I have on this thing in a swing perspective. I don't know what to do with the last week. We've got 2 options. Either we're going to cross last week's stops, and then we're probably going to have an uninteresting week, like the Fed still supporting the market, stuff like that. We're going to go deeper retracements. Or this was another fucking range breakout. And if it was, then what are we going to do with it? I mean, the problem is if you delete prices out of here, all right, we've got just a few informations. It's just probably the only information we have suggesting a range, and it isn't that big of a deal. It is just a cross signal. So this is an hesitating signal. We don't know if this is a trend breakout or if this is a range breakout. I'll bet on a range breakout, definitely. But still, we don't know. There is a risk management to do here. So you're not fully bearish or stuff like that. The best you can be is neutral right now. Right? I think we can be neutral bearish, but so far we don't know. So risk management. You don't forget to profit take on support areas. Reason why we needed to profit take out of these 23% Fibonacci. The next one is 38.2, and this is definitely where you need to lock on some gains if you're trading to the downside. So you're not bearish for an end of the world kind of trade, more likely ranging and consolidating the stupid bullish trend we had. All right? So that's the context we need to trade right now. Risk managing, try to sell as high as possible, trying to target as low as possible, but never forget to profit take out of the support areas, Fibonacci retracements. There is another thing I wanted to share with you. That's something I just figured out with the French users, and I'm going to share them with you. So if you just zoom it out, let's put the prices back in the game, all right? So this is what we've done, rising from ashes, all right? And you can clearly see that something is important in here, all right? Just have a look at this. This is where we've got the lowest volume area. I'm going to tell you, remember this vertical line? This is what we saw on the cyclical activity on the VIX. Remember the 38% timing structure we highlighted. Remember, there was a first area of risk between the 15th of April to the 15th of May, and we definitely highlighted this. This is where VIX has been picking up, and we have highlighted the next cycle was around the 1st of July. So this is the next big problematic area in terms of systematic kind of problems. All right, something systematic can show up at this time. That doesn't mean it will. It's just a timing area, and that doesn't mean it's going to be the 1st of July. It's just around this time scale. It gives you perspective of how long those swing trades may take place, may take before actually taking place. All right. So I think the 38% fib, I think definitely we're going to go there. Are we going to break it lower, just go lower than that? I think we might, because there is this LVN, low volume node, on a weekly basis. Because if you study the volume, I can clearly see that we've been building very low volume in this area. And I think this is not normal, all right? This lower boundary in here, very low volume in this area, okay, in here. As you can see, we've got 2 major boxes of volume. The low volume node and the lowest area. So we've got two major sets of volume on the big range. So to me, this is a big range. This is where we're going to have breakouts in the range. If we ever had to enter the lowest area of this range, this is where we're going to have strong breakout. This is where the psychology will switch. This is where we're going to have panic selling on the VIX. So we're going to have price surging to the downside. All right? But I don't say it will happen. All saying is that if we were about to do this in the future, first we're going to build a support in here. We're going to get there, highlight the area, retrace, and go back there. And this is where we're going to trigger the panic trades. All right? But in order to induce psychological reaction, emotional reaction, first we need to build some price area there. So I stand for this. I definitely think we're going to get into this blue area because this is an area of interest in which emotionally driven actions will be taken. So we're probably just going to get there to trigger those emotions because it will trigger trades, and this is probably where people will act. So I think we're lacking a volume in this area, thinking that, I don't know why, but that's a feeling. I think we're going to get in this area. Will be the next profit-taking area. So targeting the 38% fib, a little bit lower if you want to be aggressive, but I think anyway, just profit-taking in here or in here, does that really make a big difference? Not to me. All right. So all I know is that if we go there, if we go close to this target, I'm looking at selling entries. No worries with that. I'm definitely will. All right, I'll do it in a 1 hour chart context, obviously. All right, so the 1 hour context last week has been giving us a trade in here. So far it's working, but we've already been terminating that trade. As you can see, the cycle has been terminating. We're back into a bullish cycle. So I would say most likely to come this. So for the week to come, this is the area you want to look out for. All right, overcoming the 1 hour chart context, getting close to the 4 hour target, and this is exactly close to Fibonacci retracement. So you put your goddamn fibs, and this is where we're going to trade, close to 61, and as usual in the 61 to 76% fib area is where the magic will probably show up in the week to come. So this is where I like to sell. This is where the 1 hour trend channel is. So yes, I would definitely say probably some bullishness to expect earlier this week, but that's not a certainty. I would say I'm not selling in here. It's not interesting. Selling in here, yes, definitely is low risk kind of trading. But the thing is that I still have my selling entries out of those out of those market tops. I remember I've been selling in here. So I still have 50% of the trades. So if what's coming is just this, and if we're done with the consolidation, and if the first signal we saw last week is the good one, and if we're breaking supports just right now, I'm fine with that. I still have bearish trades. So we could do this or this. All it says is that this week's interesting prices are there to look out for more bearish entries. All right. So this will be an area, a speculative area for bearish actions. All right. And obviously, no signal, no trade. Simple as that. This is where you're going to look out for securing the trade, the bullish trades, right? Securing the bearish trades. So this is the area where the bears will profit take. We need to go lower lows, and we need to break through the support context. So it's below support context. Any signal we'll have there is where the bears will lock on some gains, partial gains. In this area, obviously no signal, you wait for the next area. It's pure and simply this. It isn't complicated. It's just answering the simple questions in a defined order. First of all, what is the most probable context? You can be wrong. All you care is not to be fully wrong. You shouldn't be assessing a range when there is a trend. This is not trending. This is most likely ranging. To me, all right? But we have very few informations. But in here, look how, man, if this is not a range, I don't know what the hell a range is. All right? So many arranging information, range breakout, bearish range odds, range breakout. This is definitely a range. So if you're too aggressive right now, thinking that the end of the world is on the corner, then you're wrong. If you're thinking that we're going to rise from ashes and surge to the upside, you're probably wrong as well. We're just ranging, point and period. We got to talk AUDNZD because there is something to do with this one. I'm going to put prices back in the game. All right. So remember, we were looking at buying entries in here in a 1 hour context, buying this dip out of a mature range structure. So I'm going to use those tools. So range like that. All right. Bam, bam, bam. Out of the trend channel in here, right? So 4 boundaries on the range, so mature range. Now what we're looking at is to get there and build an accumulation before breaking up, all right? So that's the next step. So speculative traders will anticipate this and try to buy entry in here. I did myself. We had a sine wave target, everything we needed to buy this area. It's working and reactivating bullish early this week. That doesn't mean it's a one battle. Remember that we're going to secure the trade. So those who've been buying those lows, you put the stop loss at the break-even point or close to the lows. If we ever were to pull back, then you get the fuck out and you wait for trade in the context. All right? We don't know if the bottom will build itself in here. All we know is that we anticipated, it works. Now we're securing the trade. If it doesn't work out, then we're going to buy lower. All right. The beginners, they don't trade this. Remember, it's a mature range, so you don't trade mature range when you're beginning. What you do now is you wait for the accumulation to set itself. When the accumulation will set itself, you'll trade the breakout, probably close to this area. All right. So depending on what you do, on how mature you are in your trading perspective, in your learning process and stuff like that, you'll trade differently, because this is no black and white. There is no single rule for everyone. Trading is adapting to conditions, adapting to your own conditions as well. So yes, the hands-in keys to get to profitable trading doesn't exist. These are just stupid bullshit that some guy may be selling you. I'm not. So let's be honest. You and I will definitely end up being 2 different traders, but still we can start with the same basis, because I think my basis is probably the most solid ones you'll come across and the most adaptable one. And that's the key. You need to be adaptable, because that's what a trader is. The trader just adapts to the market conditions, and the best trader is the one that adapts the most. Simple as that. All right, we're going to stop in here today because it's already 56 minutes in, and that's more than enough. So trade carefully if you do trade anything related to the dollar. It's going to be risky because you don't know any fucking thing regarding what the Fed will say and stuff like that. So don't be too aggressive. If you do get close to dollar trades, GBP is going to be interesting as well. WTI is getting closer to my selling area as well. So I'm probably going to forecast some trades. Oh, God damn it, we're here. Oh man, I hope I didn't lose this thing. Maybe I missed it. No. All right. So no signals for now. I'm expecting a little bit more, just an inch, a little inch higher. But I may just have. Let's have a look at signal. No. All right. All right. So the momentum is pretty bearish at the moment. As you can see, the bearish cycle has already set its place. So I would say no, probably just another rising cycle, like bam, bam, and then we're good. All right. So I think there is still a little bit of room to work this out. No urgent bearish signals in here, so I think WTI is going to provide slightly higher prices, and I'll get to trade those. All right, that's pretty much it. So see you guys on Wednesday for the second correction of the MCQ test. See you tomorrow for some intraday trades, and see you later this week for the next swing updates. Bye guys, have a good one.